Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Monday, March 13th, 2023. The craziness really lasted all day today for our trading session. It was wild, it was woolly, it was up, it was down, it was all over the place. And there didn't seem to be any rhyme or reason. There was plenty of PPT, plunge protection team, which is real, by the way. This is a real set of people who have a job with the federal government, and their job is to go in and support a market from dropping, from crashing, from doing whatever they don't want it to do. And that was in full force today. And that's really what came in yesterday. And shortly after the Globex opening on Sunday, they jumped in, they took, and they ran these markets. Now, what I found interesting is that once Europe came online overnight, we sold. And then we sold pretty much right up into just about 8 o'clock Eastern. And then we had our opening, and then they just went at buying it again. And it was algorithms. And it was actually appeared to be forced, like they were being just pumped. And in the NASDAQ itself, I happened to notice that first Apple and Microsoft both were basically lower to or unchanged. Then suddenly Apple jumped and they ran it up. Then Microsoft jumped and they ran it up. So who's ever doing this, if we want to call it plunge protection or just this type of manipulation that they're doing in the market right now, they knew exactly which stocks to go for in the NASDAQ that would have the same power in the NASDAQ as it did in the S&P. Now, also noticeable to me today was the Russell being down most of the day. While they're racing the NASDAQ beyond reason, the Russell remained lower. So this is very selective of how they're handling all of this. Throw into that, we still had the roll March contract out of March into June. That still was in play today and actually picked up some steam. And we saw some incredible size, let's say, between the two, particularly in the S&P and also in the NASDAQ. Now, what also was extremely noticeable today? Gold up $50. Silver up over, I believe, let me just take a peek. Where is my silver? Come on, silver. Where are you hiding? There you are. Up over $1 today. Both metals doing extremely well. Now, as we know, as I know, and I try to pass on, in gold traders, they hate uncertainty. They hate uncertainty. And right now, that's what the markets are presenting us. So we have the government stepping in once again to prevent the market from going down, which it needed to do in a response to what's continuing to occur and build. Now, we continue to watch JP Morgan get hit. They're being bid up a little bit right now after hours as Globex starts. Goldman Sachs taking it on the chin right now, bid up $1.50 over from where it closed, but it was down 12. Charles Schwab seems to be on the chopping block. Now, and all we heard all day long was from the bank, oh, we're fine. We're very liquid. We're this, we're that. What's up with you guys? Why are you picking on us? It's because everyone's in the same boat. Silicon Valley Bank passed its audit just 14 days before they closed the doors. Silvergate Capital passed their audit 11 days before they closed the doors and went out of business. So either something's up with the audit system or we're not really finding out the truth on what is totally going on within our banking sectors. Now, do I think it's like, I got asked a question today. Do I think that Bank of America is going to fall to the pressure? It's like, I think that Bank of America and Goldman Sachs and JP Morgan and Morgan Stanley and Wells Fargo, these are massively large nationwide, particularly like Wells Fargo, Bank of America, Citigroup. They're nationwide. and Chase, JP Morgan Chase, they're all over the country. So I would, and I hate using the word, but I'm going to do it, presume that they are pretty well funded, or they're balanced, and they understand where the risk is. Supposedly so did Silicon Valley Bank. But again, I don't sit in on that. I don't get to look inside. It's not something where I am privy to that information. But we saw a lot of just crazy moves today, and whether they were supported by the government tossing taxpayer money into this, like, oh no, the taxpayers aren't going to have any. We're trying to protect you. It's like, really, where do you guys think you get the money from? Did you all like pass the plate in the Senate and then the House, and that's what you're going to use to support Silicon Valley Bank? I doubt it, right? So it really comes down to: are they all going to take less money? Are they all going to forfeit a month's worth of salary so we can all put it to saving this bank? Should you also gung-ho about it? I doubt it. So it is the taxpayer. It's us, folks. It's us, once again, going to foot the bill for the Fed's mistakes. Now, that's just me getting up on the stump and putting my 2 cents out there, because the trading today was ludicrous. It was ludicrous to watch what they were doing, particularly in the face of an extremely negative occurrence of what was happening and continuing to unfold. This isn't something that it's like, oh, it's just a flash in the pan. No, it's not. And now they all want to hang their hat. Well, we'll see what the CPI brings us tomorrow. Seriously. So what part of the last 2 weeks are traders missing? Where the Fed said, we intend, and then they're going to turn around and tell me, right? We intend, said the Fed. The chairman himself said, we intend that interest rates will continue to rise, likely at a higher rate than we've been doing, to control and get inflation back down to the target of 2%. That's what they said. Then comes Silicon Valley going out of business and Silvergate shutting their doors. And then we had Signature, KeyBank, Sunday, go in and take them over. So that's the third. Fifth Third Bank on the hook. Republic, First National here, and in San Francisco, they're kind of like looking a little shaky. And I want to tell you folks, these are banks. First Republic Bank, that is a huge bank for wealth, right? That's their big gig. We cater to the wealth or the wealthy. So they have all this stuff that goes along with that. Now suddenly they're being questioned as to their stability. I can't even imagine. And so are we going to see a big run over there? And again, we, the taxpayers, are going to be footing the bill to protect the wealthy. It's a very strange situation going on, and it's not making it a very easy market to trade, I will be honest. Now, I did make money today, but then again, I'm a day trader. And again, I'll go one step further. I love to scalp. So, oh man, I'm going to grab 200, I'm going to grab 300, sometimes 400. Great day. So I can get in there, grab what I need, get out. And the moves did provide that. There were moves when these buyers, when you saw these algorithms click with the buy program from whomever, it just went roar. And then it went roar again. It was like, okay, I'm just going to get on board. Now, it does not make, for 1 second, it doesn't make it any easier to position trade or to adjust positions, because it's questionable as to where that adjustment should be made. Where do we think we're going to go from here? Volatility increased today. The VIX went up today. So a lot of things are falling into place, but yet they kept pushing the NASDAQ from being down 100 to being up 150, and then being up another 100. And then it just buy it, buy it, buy it, and continue to buy it. It gets to a point where it's like, what are you people thinking? How on God's green earth is this ever going to escape? Now, that may be your thought, but let me show you. I think they may have cleared it. I'm not sure. I'm going to go over. Let's go over to Apple. Apple traded some, it wasn't the best Apple day, but this Friday, major expiration, right? Major because it's Friday, it's the monthly, it's the quarterly, et cetera, et cetera. Look where we did. 152, 151, from 57 and a half, even up to 160. Buy them, buy them, buy them. Where's the best open interest? 140. There's your floor. Here we have another huge one, 145. If we come all the way out, okay, they likely probably got it down at the 150 level. These are huge open interests. We have a lot of things settling up. Today, where do they go? 145, okay. Putting a lot of money back in or selling those puts. I don't know. I can't tell. It's volume. I don't know. For every buyer, there's a seller, et cetera, et cetera. But was it more to be credited to the buy side? Is the gamma going to come out negative or positive? So we have a lot of volume activity here in the options and Apple. Hence, you get all this movement. Whether it was being manipulated higher or not, it forces a lot of things to happen. Now, I just keep that all in mind when I'm watching this, because algorithms are algorithms are algorithms. They're programmed, they get turned on, they get set loose, they'll go out until they find their whatever they're searching for, whatever they're scanning for, and when it all puts together, A plus B equals execute. So that's what happened, and it's all a done deal. So I don't have a problem with that functionality of an algorithm. But I tell you, when it's tied together with a market that's being manipulated against plunging, it gets to be a little bit out of hand. So back to what I think happened today. It was a wild move. A lot of it, folks, remains in the fact that we have this huge gap in the roll. Now, if I just had to go on the June contract, let's just see. Man, that's not what I wanted. Let's do M20. All I want is just the June contract. Check it out. Check it out. So if I had to count from here, right, that's going to be, we're coming down 1, 2, whatever that could be. Look what we did. Went down and we put in a new low. We put in a new low and then raced up again. So I need to come over and now focus here and translate that to this. Right? Remember what I was looking for when I came in yesterday? What we were looking for? We were looking for the market. It did go up first, so it would have disqualified that trade. But I was looking for it to make a new low to finish the third. Now, I'm going to go back over. Now, come on. Did it? It's kind of weird, isn't it? To figure out what this is. But this finished something, and now we're rallying again. So, again, I cannot count this as a 4. I cannot count it even as anything. But what I can think is I got 1, 2, 1, 2, 3. That's the third, which would say that somehow in here, which I don't see, I can't count the third as a triangle and not the first and the second. But there it sits. And one more time, the low, 11,802 took me below on the June basis, those lows that we're seeing on the continuous, which marked March contract. So I'm in a quandary because if I'm going to be working off the continuous chart, that's where I continue to put my labeling. But now you can see what we're up against. How do I want to factor that in? That did make a new low basis June for the sequence. Basis the continuation chart. Got no banana. So what does that leave it for me? I'm going to leave the one there. I'm going to say A, B. I'm looking for a little bit more. If not, the C wave ends, slight teeny failure, but we got a flat 2 and we're starting to come down. Right? And if that's going to be ABC, and I'm going to put a little 2 up here, it needs to not spend a lot of time wondering, do we go up or go down? They're plowing into something in the Dow right now. God only knows. And I got to be honest with you, God only knows. They're just pumping up Microsoft again. And I kind of look at this and go like, what is pumping up the Dow? But here we are. We're seeing the turns happen, not in the Fed funds, but in the 10, the 5, and the 30, they're starting to come off a little bit. So is the volley over? Is the plunge protection team done? Are they hanging out for another day or two? Are we going to see more as the news progresses, as this moves forward? There are investigations to look at Silicon Valley Bank. There are investigations to look at, hey, dude, you passed out, you sold your own stock shortly before you shut the doors, or the doors were shut for you. You handed out bonuses to yourself and your employees days before. In fact, I think the day of the massive decline, they all got their bonuses. What's that all about? Oh, these were all pre-scheduled. I think you're going to have to come up with a little bit more reasoning than that when we're starting to bail out your depositors. We're giving them full value for whatever they had, they get back, courtesy of the federal government. So I, for one, am going to stand up on the chair and say, hey, I need some answers. I'm a taxpayer. Do I count? Back to the count. If it is done, and we're going to start dropping, and I'll open this up so we can take a peek inside, right? 1 or A, B, tough call. Tough call. I don't know. Be flat. I could consider it a flat, but that would suggest plunge, little pop, plunge. And notice I'm keeping going. That's me moving the mouse. And that's what I would be looking for. Then we're back on track. Then it's almost like, okay, we'll give you that. This whole little folly, whatever you did and all in here, we'll give it to you. But I'm not labeling anything right now because I don't think this is over. I think we still are going to have surprises. We're still going to be dealing with garbage. They're going to fight to keep this market from doing what the market needs to do. Because we don't want to start a bank run. We don't want to see this happen. And now I'm hearing that someone was in the federal government in the Biden administration. So we don't want to have a TARP situation, which is what they got done in 2009. You lent money to all the banks, to all corporations, so that they could keep functioning after our great economic collapse. And for the most part, those TARP loans were paid back. Are we going to present that again? No, we're not looking to get into that situation. The Biden administration said, it's like, oh, good. I'm glad you're going to put your stamp of disapproval on that, because we don't know. If it comes right down to it, that we let the plug be pulled and the market to drop, so whatever needs to happen can happen, and they're going to try to prevent it. So that's what all this was about. And if there's that much energy to get out, and they're going to prevent it from happening, and we're going to hang our hats on a CPI number, which comes tomorrow. But this is a chock full week, exactly, to be honest with you. So let me just, while I'm looking at that, I'm going to go over and let's just take a peek at what do we have coming tomorrow. Well, tomorrow we've got consumer price index, the core CPI, blah, we've got all the nuances of that. Then on Wednesday, we have retail sales, we have the producer price index, the core PPI, et cetera, et cetera. Then we have the Empire State Manufacturing. We have business inventories. We have home builder survey. That's a survey. Thursday, initial jobless claims, import price index, housing starts. Philly Fed Manufacturing. And this is all 8:30 Eastern. There you go. So we have a lot. Friday, industrial production, capacity utilization, U.S. leading economic index, consumer sentiment. We got a pretty full week for the balance. We got a pretty full week. Are they going to try to hold this up? Why? Because they don't want to, they want to swirl with this talk that the Fed, the Fed's only 25%, they can't do 50%, they can do 75 basis points. Come on. They really should they should just ease now. Look at the situation. I mean, the conversation is deafening. Why would they have to change their mind? Well, look, a bank failed. It's like, not because of inflation. The bank failed because, in my opinion, like I said yesterday, bad trade. Bad trade. To feel for 1 second that locking in 1.63 interest to give to your depositors, and then the interest rate that you're going to have to pay them just way exceeded. And so it just destroyed the trade. I don't know. You wonder sometimes. In any case, let's go over and take a look at the S&P. In the S&P, it really is the same story, but here we had it. Nice deal, a little bit cleaner. Still pretty flat, but it did go down twice. But look what happened. Twice, whomever there pushed that button and bang, 38. Suddenly you got it up 30 points. And I wasn't joking. It went that fast. And then they did it again. Drops down to 41. Next thing you know, it's up at 65. That fast. And kept going. Both times. Kept going. So all of this continues. A, B, this is strange. This does look like a 5 to me. Could be an AB, and that's the C. I don't know. This could look like a B wave. I don't know. So the S&P is a little bit stronger to make a solid run to try to get back towards that high, 39.70. NASDAQ is going to lead us out of the wilderness. There's Storm and Norman in on it now. So allow for that. Again, what I could put in here is, I'm just going to put here to here, because that would be 1. And here are 2. We've already seen it come up to 70.5%. Can't go over 4,019. That would break the rule. Wave 2 cannot overtake wave 1. So that's what I'm looking at. Anyway, I'm looking for additional upside. Again, if this thing starts to plow lower, and this is finishing our subminute wave 2, and this is somehow going to work out to be wave 1, or a 1, 2, and we're just going to start dropping, then we're going to head below 38.46 before you can blink an eye, and just keep on going. And moving averages, spaghetti factory here. It's kind of looking, they're all still kind of pointing down, even with that, all this and all this. 50 really didn't do much, instead was angling lower, angling lower, angling lower, angling lower. And that's on my hourly chart. So it's still not a pretty picture, but we're going to have to trade it. So again, I'm just going to say focus on your near-term charts, your 1, your 2, your 5. Play at your signals, play along, be nice. When they do decide to go, it's pretty solid. Get on board, grab your money, be done. Okay, that's where I'm going to complete it for today. Our next update will be on Tuesday, the 14th.